Great afternoon, everybody. Great afternoon. Hope you guys all had a great day today. Hey, I just want to keep everybody in touch, and I want to make sure that I keep making these videos and to keep you informed on what I'm seeing, and maybe we can both come up with analysis together. But so today was 2/5, so it was January 5th of 2024, and from what I was seeing overall in the market, I was seeing the beginnings of a market maker buy model. You know, kind of the beginning stages. When Friday, when we had that Judas swing, well, I'm gonna say around 8:30, it started breaking down. We came into an area of a mitigation block. Okay, so it would have been this area right here, and this would be on the 15-minute time frame. Okay, so this whole block right here. Now you're probably going to think, okay, that's hindsight, but in all actuality, when we think about mitigation blocks, we like to think, okay, who's stuck in the shorts right here? Well, it'd be smart money, right? And so they're going to want to mitigate their orders. They're going to want to get rid of those orders. So what did the market do? Right here, it crashed down and it took smart money out, the ones who were left short. Okay, and that's why I believe that was the beginning of a market maker buy model. Um, so yeah, right here is you can see real close when it shot up and then crashed down and then shot back up again. It left these guys up in here, so I would identify this, and I'm just going to go with the wicks as a mitigation block. Okay, so fast forward to today. What happened is we look here on our 5 minute. Okay, today was just a really good silver bullet day. Nothing too crazy. We start off okay. So this is the 9:30. Okay, the bell rang. What did it do? It dropped. It left all this buy side up here. See how that's nice and smooth? And this is the 5 minute. Okay, but that's how we're going to identify. Typically, I would look on the 15-minute to identify those relative equal highs or relative equal lows. But here on the 5 minute, if you collect three candles, that makes it 15. But we started in 9:30 bell rang, we dropped. Okay. Um, for the silver bullet on the 5 minute, did we get it right here? So this was right here, 10 o'clock. It dropped. Did we get that on the 5 minute? No, we didn't. But when it came down here, we draw our little thing right here. We identify this as a fair value gap. Oh, sorry about that. A fair value gap. We can see that price came in and tagged that for our silver bullet. Today was a little bit tricky on where to identify uh, kind of market direction. It was one of those flip flop things where I thought, okay, well, maybe on the 1 minute it was going to go for like these swing lows right here. I don't know, this swing low right here, but it didn't. It stopped. And when I kept breaking down the charts, okay, flipping through the charts, I seen that it was a part of an order block on the 15-minute time frame. Okay, so right here, and I'm just going to kind of draw this out, is the last down close candle right here before the up move. Okay, and that was going to be our 15-minute order block. Okay, so when price came down here, okay, slammed on down, it hit the first time, but then the second time it respected it and bounced off. That was that could be just identified as a good entry to go long. I go long during that time? No, I did not. The 5 minute would have done you good though, as far as the silver bullet goes. A lot of people do it on the 1 minute, and which is totally normal. I did back studies. Now this is dead true story. I did a back study from January 2nd through January 30th. Okay. 17 days out of 4. So 17, 21 in total. 17 days, there was a 5 minute fair value gap in between 10 and 11. They got hit on the 5 minute. Okay, so 17 days out of 4. That's pretty good. That's pretty good. And today was a perfect example of that. Um, when we came down, very tricky though. I that as far as okay, getting the next push up right here on our silver bullet, that's perfectly normal. Um, getting in right here, and then I would just take profit right there at that swing low. So that would have been a perfect entry right there on the 5 minute. And I've noticed that the 5 minutes are really key to, like, I don't know, get my mind like away from the 1 minutes, because sometimes the 1 minutes can really, I don't know, they can play with me a little bit. They can play with me a little bit because we'll do a lot of wicks, and that makes a lot of noise. That makes for a noisy chart. So going on the higher time frames is it helps me, really settle down with that. But turning that into a inversion fair value gap as well, you could do that. But like I said in the beginning of the 930, I knew that we're eventually going to be pushing up higher just because of the clear fact of smooth these smooth highs right here. See how they're nice and smooth? They're not real, jagged. They're real jagged, if that really makes any sense. So I knew once the 15-minute order block was hit that, going up higher, we're going to aim for this buy side liquidity, and it tagged it. It displaced. Okay, so I'll just draw a line for you. Okay, so those were our smooth highs right here. Okay, we're going to identify that as buy side liquidity right there. Okay, what's it do? It hits it and then drops down. What's it do? It displaces. Okay, so in turn, it created a fair value gap right there. All right, so that's just another little, I mean, because the market's either going to go to one or two things. It's going to go to liquidity, or it's going to go to inefficiencies. That's it. Okay. Um, but today was a little V day is what I like, was what I see. Um, for my bias going in, when I looked at what was it? Was it the weekly? Yeah. So, okay. Last week, no, when was that? It was Monday. Well, I guess the week of the 29th, we came into this area right here of inefficiency, okay, in the forms of a fair value gap, or what we would also call a BISI, buy side imbalance, sell side inefficiency. I'll write that down, but still, if you could just identify that it's the fair value gap, and it came right into that consequent encroachment. Now, keep in mind, this is the 1 week. This is the 1 week chart. So these charts really, in my opinion, are the cleanest. I know that may sound silly, but the weekly can really give you a great bias on weeks ahead. But on this inefficiency right here, price came down, tagged into the 50%, or we would call that consequent encroachment, and then bounced right off. So automatically, I knew that we were going to be bullish. It's just taking the time and really finding out our best entry. But yeah, hell, even equal lows right there. But that'll be for a later date, in my personal opinion. Once again, this is not financial advice. I'm just going to say that. Um, in my opinion, I do see uh we're in the midst of a market maker buy model. Okay, just for the sheer fact, once we mitigated them orders and we rocketed off of it, came down to that order block. Mm, you know, definitely keep your eyes sharp coming into Tuesday, Wednesday, Thursday, and Friday. just where we're at. But keep in mind, we did come off the weekly. Um, buy side and balance, sell side inefficiency. Bounced off nicely. We came off that mitigation block. We traveled up, came down to that last down close gainable for the up move. Okay, that was our order block. So right now we're just I'm gonna wait and see what Tuesday can bring. Um, it's gonna be interesting. It's definitely gonna be interesting. But anyways, I just want to make this video to keep you guys up to date on what I'm seeing, and I hope that we're all on the same page. We're all on the same page here. But okay, I want to thank you guys for your time and to